And let's kick it off with the hot topic of the hour. More world leaders traveling to Washington, D.C. today to meet with President Trump. NATO Secretary General Mark Rutte will meet with the president at the White House today to discuss security in Europe throughout the ongoing Russia-Ukraine conflict. This following yesterday's Oval Office meeting with Irish Prime Minister Michael Martin for the annual St. Patrick's Day celebration. Trump calling out the country for taking advantage of U.S. pharmaceuticals. The EU and Canada, meanwhile, responding to Trump's tariffs yesterday with retaliation. We've got retaliatory countermeasures. The president now considering tariffs on the lumber industry, he says, for national security concerns. President Trump also touting his own administration's accomplishments in a post-Bidenomics world. Watch.
I think a lot of the stock market going down was because of a really bad 4 years that we had. When you look at inflation and all of the other problems wars and inflation and so many other problems. But we're going to have very good years. I don't know if you saw a little thing like the cost of eggs, little to you, but big to people out there, down almost 30% in the last few days. The very big thing that I'm very happy with is oil is down to $65 a barrel. And that's faster than I would have anticipated. We put on the gas. We stepped in the gas in order to get oil. And when energy comes down, prices are going to be coming down with it. So in a very short period of time, we've done a very good job.
Yeah, and all of this optimism over the policies coming out of the Trump administration, and yet we still have all this nervousness, Mark, in terms of whether or not we're going to see a real slowdown later.
Well, I mean, tariffs are obviously causing uncertainty with investors, but also CEOs. Yeah. I mean, when you don't have clarity, it's tough for you to really implement your growth initiatives. So they're kind of in wait-and-see mode right now. But I think it's important for the viewers at home who might be concerned about how tariffs are going to impact them to understand what worst-case scenario looks like. And as a country, we have total personal income of about $25 trillion a year. The total amount of goods we import is $3.3 trillion a year. If there's a 25% tariff on every single thing we import, that equates to a 3% increase in tax on the taxpayer. Is that fun? No. Is it the end of the world? No. If you then pair that with no tax on Social Security, no tax on overtime, no tax on tips, he just floated no income tax on any income under $150,000.
Right.
Now you've completely offset the cost of tariffs, and I think a lot of people would actually like that.
Yeah, I mean, we also see this effort by corporate America to say, you know what, President Trump is going to want me to build it here.
Yeah.
And they are making plans to transition supply chains right now, many.
That's great. I mean, if we can bring stuff here, number one, we know we're not going to have issues if there's ever another pandemic or 100-year flood, right? But number two, it creates jobs for Americans, high-paying jobs, jobs that they appreciate and value.
And that's what the president wants.
Well, and we're missing the biggest picture item right now, and that's bringing jobs back to America. Nobody's talking about that. When you demand manufacturing jobs back to the United States of America, you're going to see immediate job growth. We saw that in Ohio. JSW Steel, that has a subsidiary here in Ohio, has been competing with Mumbai, which is where their base is. We're looking at, the CEO said, 100 jobs this year coming back to the state of Ohio. And that's just Ohio. When you look worldwide, we're going to continue to demand this. And I understand market volatility. It's going to go up and it's going to go down because there's so many things happening, Ukraine, Middle East. But the bottom line is President Trump told every CEO, every American, I'm going to invoke tariffs because I want it to build better here in America. And that's exactly what he's demanding. So CEOs had enough time to make plans to start moving their base here, headquarters here. We have given far too less to the American people. The fact that he talked to Ireland's prime minister and said that most of our pharmaceuticals are in Ireland, I looked it up, Maria, 9 out of 10 pharmaceutical companies are in Ireland. Yeah. So again, we're not being self-reliant. We're actually relying on foreign countries and many adversaries.
About the electricity in Minnesota.
Well, 100%.
Yeah, that also speaks to the tax situation in Ireland. Remember when Obama raised corporate taxes, so many companies went and headquartered in Ireland.
Yes.
They had a 9%
Apple's whole litigation over the whole thing that they lost the tax code in Ireland. Absolutely. I want to say, Maria, though, that this is a wake-up call for Americans. You know, we really outsourced. We became very litigious. We had all these protectionist laws of our worker. And so we outsourced that to the Asian theater because it was a lot cheaper and we could get it imported into Walmart, basically, and distributed to the American American population for very cheap, very cheap. And so now what we want is we want the jobs to come back. We want manufacturing to come back. But we want to complain, to Mark's point, about a 3% maybe tax increase for the people that are making above $150,000. You can't have it both ways. You can't say, let's bring it back here so we can be, we can self-emulate. If the world implodes, we can be self-sufficient, which we should be able to be in our country with all of our natural resources. You can't say that and then say, but please give it to me at these cheap Walmart prices that we've been paying for 3 decades, because you can't have it both ways.
Well, the president's also calling out the Biden administration for the border crisis, of course, unvetted people coming in. Watch this.
This country needed somebody to defend it. It's this big, beautiful place that was being ripped off by illegal immigrants coming in from prisons, coming in from mental institutions, gang members, gang leaders, drug dealers, pouring into our country with the open borders. The worst people allowed into our country, and we're now getting them out. This should have never happened. This should have never happened. So we're bringing back our country in many ways, not only financially, and financially we'll be stronger than ever before. I think the markets are going to soar when they see what's happening.
ICE arrests since Trump's inauguration already outpacing all of the arrests made for the entire year 2024. Acting Director Todd Lyons now accusing the Biden administration of, quote, cooking the books on ICE data. He says the majority of the 113,000 arrests made in fiscal year 2024 were pass-through arrests. In other words, he says we found tens of thousands of cases recorded as arrests when, in fact, these instances were illegal aliens simply processed and released back into American communities. ICE stressing none of the 32,000 interior arrests made under Trump so far have been labeled as pass-throughs. 14,000 are convicted criminals and nearly 10,000 have pending criminal charges. This is a big story. I mean, they were just arresting them, processing them, and sending them back into the street. Mehek.
Right. And Maria, this doesn't surprise me. Remember, I visited the border last year, and what Border Patrol told me was that they were glorified babysitters. They didn't have enough funding. We know that. Biden cut funding for CPD. So what they were doing was processing and releasing to anywhere in the United States of America, and then they were given a date to come in front of an immigration judge. When you're not processing, when you don't know if somebody's a convicted criminal or not, when you don't check identities, and remember, that happened in October. The New York Post broke that story where ICE was allowing people in without proper authorization, without proper ID. And number one, Biden and Mayorkas said the border is secure. Lie after lie after lie. So this doesn't surprise us. We just have to get this under control right now. That's all that matters.
I was wondering who was really leading this effort to keep this border wide open, because we know Joe Biden was, incapacitated in many cases, right? So who was it? Was it Alejandro Mayorkas? Was it somebody else leading the administration to allow all of this?
Probably. Mayorkas had to play a part. But if you remember, on your show, we saw the videos of the migrants crossing the border, waving into the camera saying, thank you, Joe Biden.
That's right. That's exactly right. And I've been to the border plenty as well. I saw exactly what you did. We're just getting started this morning. We've got a lot.
A State Farm executive has been fired after he was recorded on an undercover video discussing premium increases in California in response to the wildfires. Hayden Kirkpatrick was vice president for innovation and venture capital. In the video, he says, quote, this: there never should be houses built in the first place in areas like the Pacific Palisades. He says residents want, quote, natural areas around them for their ego. And that the area is a blank desert, and so it dries out and it's a tinderbox. He made disparaging remarks about California officials. He bragged how they were going to be canceling more policies. State Farm did issue a statement, and they say that his comments no way represent their position with regarding the victims of the tragedy that was the wildfires, where lives were lost and thousands of structures destroyed.
And he's there saying, look, they should never have been there in the first place. I mean, look, there are a lot of policy mistakes made in California as a result.
Look, his comments were cold, and they were certainly offensive to the victims, which is not cool. But when you look at the facts, I mean, the California Department of Insurance, they're the ones at fault here. They would not allow State Farm to raise premiums to a point where they were no longer losing money. And look, if I was producing a widget and I was selling it for $5 on the shelves of Home Depot, a widget that cost me $5.50 to make. If I went back to Home Depot and said, I need to charge $6, and they said, no, you can't, I would stop producing the widget. That's just how business works.
Well, this is all about government regulation. It's going to continue to strangle every single market. I said this as I've looked at our prosperity prospect today. If we don't get rid of regulation in every industry and we over-regulate, this is what happens. We see people dying in wildfires. We see over-regulation in so many other markets that are driving businesses out of America. So what he said was not wrong. The way he said it was incorrect.
And you said that, Maria, too, about like, look at New Orleans. It's under sea level and the levees broke and it was, you know, all those structures, but they rebuilt. I mean, like, we can say that everywhere. We have hurricanes in Florida. Should we just give up the entire state and just say all insurers just exit? Like, there has to be a solution, because I live in Florida and this is a massive problem. I can't tell you how many insurers have pulled out. Now you've got California and Florida, both sides of the coast, and it's just a mass exit. So something has got to work better, be changed, be fixed. And a lot of it is this weather. It's gotten crazy.
Well, that plus local management, right? You have to also think about what local management's doing with the funding. There was a massive issue in California and what they were doing with just monetary resources. So that's another issue.
Maria, I'm glad you brought up the policy mistakes, though, in the state of California. Deforestation. I mean, they have made the water issues that were very well documented when this tragedy happened.
That's right. So and that's what you keep hearing from Rick Caruso, by the way, who campaigned to become mayor, you know, battled against Karen Bass. She won. It's where we are now. Charles, thank you for that. Meanwhile, let's get to the weather.
Hey, Secretary Doug Collins getting into a heated exchange with Military.com reporter Patricia Keim during an interview at the agency over Doge. Watch this.
I need your help, because all I seem to be doing lately is fighting back against innuendo and rumor stories. In fact, Patricia, part of it is with you. I just need your help, because when you start headlines with there's a rumor going around and that we've heard that hurts my veterans. That scares my veterans. That scares my employees, because it's not true. Will you commit to not doing that in the future?
A rumor is different than if I have a source.
Then you source it to our PR people and let them know, because you know something? I've got people who are reporting stuff right now who aren't even calling us.
But I did call about that.
Good.
I did call about
and you got the answer. But yet you still report it as a rumor. Think about what it says here. Elon Musk aide is now working at VA accessing computer systems. Ooh.
You know, so, yeah. So the article, it was published last month. Elon Musk aide is now working at VA accessing computer systems. So she cites these rumors that Doge employees are going to be mining data and disability compensation and benefits. He says that's not true. It was posted on X, 1.5 million views, by the way. Nobody cares more about veterans than Doug Collins.
Yeah, you're right.
And you can see his emotion in that clip of how frustrated he is.
And he called her out. I mean, this must have been really a significant moment in that room when he called her. I'm glad he called her out.
Yeah, I am too. I wish this happened more and more, because we're constantly seeing rumors that are published, and we're constantly seeing articles that are actually not sourced. I look at most mainstream media today, and then I have to go and do more research, because I can't find the source of anything that they're saying until I hear it from President Trump or Caroline Leavitt or any of the people in the administration. So we have to be even more diligent. I'm so glad that Collins called her out, because this is exactly what's happening to the American people. We're continuing to be lied to.
Maria, one of the biggest problems, as we are all aware, with the Veterans Administration is waste, fraud, and abuse. Yeah. How ridiculous is it? How silly is it to literally say, we're afraid of you accessing the systems that produce the waste, fraud, and abuse because you might steal from us. The problem is the waste, fraud, and abuse that we're going in to look at, and you're afraid that we're going to steal. I mean, it's so asinine. Their arguments are asinine, and anyone that argues against Doge is on the wrong side of history. They're on the wrong side.
Can I just add something here? That what was happening, what Doug is referencing, is that these veterans they got scared. They thought that they were going to get their medication pulled. You know, that they were going to get treatment for disabilities, and they were really, her article caused a lot of anxiety among veterans.
There's a real impact.
Yeah, Yeah, well, that then creates more work for the people who work for the VA, because then they have to pacify the veterans. Like, yeah, I mean, it complicates everything. And for anyone who's concerned about Doge accessing data and Elon Musk having access to your Social Security number, he already has your Social Security number with Tesla when you applied for credit to buy a Tesla. Like, he already has it.
I wonder if this is why we're going to see a government shutdown, because the Democrats want to stop Doge.
Of course they do. Yeah.
All of this should go away. They're in panic mode because of President Trump and his new policies. Cheryl, thanks for that. All right, we want to... Welcome back. We are on countdown mode. We are waiting for the February producer price index to come out in about 4.5 minutes or so. Stocks are lower going into the number. Economists are expecting the PPI to be up 0.3% month over month and 3.3% year over year. Joining me now is the Heritage Foundation public finance economist E.J. Antoni and Market Rebellion co-founder Pete Najarian. Also with me here on set is Mark Tepper and Rebecca Walser. Great to see everybody today. Thank you so much for joining us as we count down to the PPI. Let me start with you, EJ, your thoughts on inflation. Is this more important this month because of the tariff conversation, EJ?
Not necessarily, Maria. I mean, as far as what we can expect today, we should definitely see further cooling. That's really welcome news. As we dug through the CPI data yesterday, we found that not only did the headline and the core come down, but when we dug into the subcomponents of the index, we found that there were broad-based declines in the rates of inflation. For example, the percentage of items that were increasing by 5% or more dropped drastically. So this is all really good news, right? Sticky inflation, or the sticky CPI, I should say, that's coming down. As far as the tariff conversation goes, look, we need to remember that the full cost of tariffs are never passed on to consumers. This is why Canada, for example, can get away with slapping 270% tariffs, or at least the equivalent thereof, on American dairy producers. They know that the full cost of that is not going to be passed on to Canadian customers. This is all part of the calculus, I think, that analysts need to relearn as we go into this tariff discussion.
Well, it certainly has been needling markets. We're seeing a real volatile stock market on the heels of the tariff policy changes from the Trump administration. Pete, how do you see things?
Yeah, no, you took the words right out of my mouth. I mean, the fact of what we're doing with the tariffs and the reaction that we're seeing, it should be not a shock to us, quite frankly. And I don't think it's a shock to the president. I think he was very well aware of exactly how the markets would be responding. But I think that the reality is that the tariffs are there. They're going to be there. He's going to continue to press on this. And because of that, we are seeing a lot of different things. And I'll tell you what, the volatility itself of the markets, Maria, has absolutely been extraordinary. I know you know this. You see it each and every day, the movements. But when you've got a VIX that's gone up from 15 to almost 30 in 1 month is pretty extraordinary. And that's exactly what we're seeing right now. So are there opportunities out there? I think they're creating more and more opportunities every day with some of the sell-off. And it'll be a very interesting to see how we get through this in terms of, is inflation really starting to come down at the rate that we'd like to see it? And I think so far what we got from CPI is the answer is yes. Can we get it today with PPI?
Yeah, I mean, I guess the question that I have, Mark Tepper, is where's the bottom here? I mean, I think at some point this is going to be an enormous buying opportunity because there's clearly massive overreaction underway. What do you think?
Absolutely. I mean, how many people sitting at home right now were thinking when Nvidia was $150 a share, man, oh man, if that thing ever comes close to 100, I'm going to buy a lot. And then it hit 105-ish the other day, and they probably didn't pull the trigger. So I think the most important thing to consider right now, if we're expecting more volatility, if we're expecting more pullbacks, and we're going to be buying opportunistically, we want to identify those positions that we love, those high conviction positions that are out there, and we want to identify at what price, when this thing's on sale, will we pull the trigger? Write it down so you don't forget it, you commit to it, and make sure that when something like that falls into your lap, you take advantage of it. I do agree this is going to be a buying opportunity.
What do you think, Rebecca?
Well, you can't ever, to Mark's point, you can't ever really know where the bottom's going to be. I still don't think we're there yet. So I think we're still a little bit on the overpriced side in general. And certainly I think there will be more consternation back and forth that will create more volatility that will bring us down further. So I think there's buy buying opportunities now, but just understand that that might not be your lowest cost buy, Maria.
Well, look, President Trump said to expect disruption.
Exactly.
That's what we're seeing right now,
Exactly.
real disruption in the markets. And I'm wondering if this producer price index takes on more importance because of the tariff conversation. Look, it's obviously early on, so we don't really know the full impact. But the input costs are what we're talking about, because if companies are spending more on the input commodities that they are needing to buy to produce the products, they will likely pass that on to consumers. So that's when the inflation story becomes scary. Markets are improving right now. The number is about to hit on the producer price index for the month of February. And as you can see, the Dow Industrials so far are off of the worst levels of the morning as we await the producer price index. Let's get right to Cheryl. She's got the number. Cheryl.
This came in much lighter than expected. Inflation easing on the producer price level. Month over month, we came in flat. We were actually looking for a gain of 0.3%. We came in flat. Year over year, again, less than expected, 3.2%. The estimate was for 3.3% on that year-over-year headline PPI number. Core down 0.1%. We were looking for a gain of 0.3% month to month on the core level, and then 3.4%. That's lighter than expected. We were looking for 3.5% on the core level. And remember that the month prior, we had seen kind of some stickiness with inflation on the energy side of things, and I'm wondering if that's going to be a component of this one. Real quick, about 40% of the decline was final demand services. Margins for machinery, vehicle wholesaling, that actually fell 1.4%. Food and alcohol retail, autos, auto parts, footwear, all of those things actually as well. We're seeing those numbers kind of come down. Also inpatient care, a little bit of a jump there. But overall, Maria, again, we're seeing that wholesale inflation story come down.
Well, we'll see if this actually helps quiet markets down. You know, the business community wants clarity, and that's why I asked President Trump that, Mark, in terms of clarity on tariffs. Once we get through April 2nd, I think markets will at least know what's ahead.
Yeah. And look, I'm talking with my buddies who are YPO members, Young Presidents Organization. They are business owners. They're running very, very solid companies, 50 million, 100 million, 200 million a year in revenues. They're not publicly traded. They're privately held. They were super excited post-election last November, December. Right. They came up with all these growth plans, all these initiatives that they want to implement. But right now, they're kind of in wait and see mode. They will still implement those projects, but it's going to be pushed out. So it's going to be kind of a timing event kind of thing. I mean, imagine you're producing a widget or something like that, and you're wondering, should I hike my prices 25%? I'm not sure. My competitors haven't done it yet. So you're playing, it's like a game of cat and mouse. And once there's clarity, whether there are 25% tariffs, 10% tariffs, or no tariffs, once there's clarity, business owners can move forward.
That's right. And that's when they know what to expect, they can adjust, and they will adjust. EJ, your reaction to the PPI, what is your takeaway?
Maria, came in a little bit cooler than the headlines. Again, as we were expecting, that's great news. Inflation seems to really be moving in the right direction. That's also true when we look at other data like the inflation expectations that just came out from the Cleveland Fed, really moving in the right direction, especially since February was a spike. That was, I think, the highest since July of 2007. As far as the whole tariff conversation goes, you're 100% right. Markets need clarity. Business hates uncertainty, right? And as soon as we're talking about reciprocal tariffs, that automatically creates a higher level of uncertainty, because now it's not just up to the president, it's up to another foreign leader. We have to respond to what those foreign leaders do, so we have to wait to see what those foreign leaders are going to do. One last point, though, is that so much of what we see within the PPI is not only the final demand, but also that intermediate demand, and that immediately makes me think of the huge volume of energy that we buy from Canada that we then sell back to Canada in the form of finished products like gasoline. We buy oil from them, we refine it, we sell it back. So an important component of that whole tariff conversation is the fact that if Canada really wants to get into a trade war, they're actually largely hurting their own consumers who are going to face double tariffs on products like gasoline.
Well, I mean, there are areas of the market that will be impacted more than others with regard to tariffs. Pete Najarian, real quick, we got to jump. Trump, but are there areas that you want to avoid as an investor because of these tariffs? Some people say the auto sector will get hit hard.
Yeah, I think that would definitely be one of them, Maria. I think the reality is this. Everybody said it already, but the idea that we have the uncertainty that we've got, that's a big factor. We have a president who's willing to negotiate, though, and I think that's a big factor as well. There's a lot of positives, I think, that can be taken away, but it's a matter of time, and it will take some time. And we know that there's been some pressure and some of the selling. But I'll tell you what, this volatility thing, I think, is something everybody every morning, I think when you wake up, that should be the first thing you look at is where is the volatility index? Because that will give you some of the indications going forward.
All right, we will leave it there. Thanks, everybody. Great conversation around the producer price index, which came in better than expected, cooler than expected, as you say. EJ, Antony, Pete, and Jerry, and we'll see you soon. Mark and Rebecca, you're with us all morning long, and we appreciate that. Quick break, and then we've got the editor-in-chief of the Wall Street Journal in-house, Emma